If you can read this, you can predict the market's next move. No, I'm not talking about magic. I'm talking about candlesticks. They're the language of the market, and once you understand them, you'll never look at a price chart the same way again. In the next few minutes, I'll break down the exact candlestick patterns that traders use to spot reversals, catch big trends, and avoid costly traps. Stay until the end, because I'll reveal the single most powerful pattern I've ever used, and how it predicted a 300% move before it even happened. Candlestick patterns are not just random shapes on a chart. They're a visual story of the battle between buyers and sellers, who's winning, who's losing, and where the price is likely to go next. The problem is, most beginners overcomplicate it. You don't need to memorize 50 different patterns. You just need to understand a handful of key signals that work in any market: stocks, forex, even commodities. So here's your crash course: 3 core concepts, 5 essential patterns, and 1 golden rule that could save your account. Before we jump into patterns, you need to understand how to read a single candlestick. Body: this is the thick part. It shows where price opened and closed during the time period. Wicks, or shadows: the thin lines above and below the body. These show the high and low. Color: green or white means price closed higher than it opened. Red or black means it closed lower. Why does this matter? Because each candlestick shows a fight between buyers and sellers. A long green candle means buyers dominated. A long red candle means sellers were in control. Short bodies mean indecision. Neither side had a full control. Understanding this is like learning the alphabet before you write sentences. Patterns are just combinations of these candlestick letters. A doji has almost no body. The open and close are virtually the same. It means the market is undecided. If you see a doji after a strong trend, it could mean the trend is weakening and a reversal might be near. But here's the warning: a doji by itself doesn't mean buy or sell. Combine it with support, resistance for accuracy. A hammer has a small body at the top, a long lower wick, and little to no upper wick. It means sellers pushed the price down, but buyers fought back and closed near the top. When this appears after a downtrend, it often signals a bullish reversal. Confirmation is key. Wait for the next candle to close higher before entering. The opposite of the hammer: small body at the bottom, long upper wick, little or no lower wick. This means buyers tried to push the price up but failed, and sellers regained control. When it appears after an uptrend, it's often a warning of a bearish reversal. This happens when a small red candle is followed by a large green candle that completely engulfs the previous candle's body. It's a sign that buyers have taken control and could push the market higher. The larger the green candle, the stronger the signal, especially near a support level. Same idea as bullish engulfing, but reversed. A small green candle is followed by a large red candle that swallows it entirely. This shows sellers overpowering buyers, a strong bearish sign, especially near resistance. You could memorize 50 more patterns, but these 5 are enough to give you an edge. The secret is not just knowing the patterns, it's knowing when they matter. That's where context comes in. A candlestick pattern in the middle of nowhere means nothing, but a candlestick pattern at a major support or resistance level, that's where the magic happens. A hammer at strong support equals high probability buy. A shooting star at strong resistance equals high probability sell. Combine candlestick patterns with trend lines, moving averages, or volume for confirmation, and your win rate will instantly improve. Here's the one pattern that changed my trading: the morning star. It's a 3-candle pattern: a big red candle, a small indecision candle, like a doji, and then a big green candle. When it forms at a strong support level, It's one of the most reliable bullish reversal signals I've ever seen. I've used it to catch moves of 10%, 20%, even 300% before the big trend was obvious to everyone else. Now you know how to read candlestick patterns in just minutes, but mastering them takes practice. Which pattern do you see most often in your trading? Drop it in the comments. I reply to everyone. If this helped you, hit the like button, subscribe, and turn on notifications so you don't miss my next video, where I'll teach you exactly how to combine candlesticks with indicators for even more accurate trades.